So we want to talk about how do I get out of a loan that I'm in? I'm paying more than I should. My interest rate just jumped because I got into an adjustable rate mortgage. Whatever it is, I want to cut my loan down into a 15-year loan instead of a 30-year loan. So what are the requirements to refinance? So I'm sitting here with Nick Pakulla, my recommended lender, and Nick, I know that I've talked to a lot of people and they haven't been able to refinance for one reason or other. Most of the time I hear that it's equity. Is that still correct?
I think nowadays we're almost, depending on the county you're in, we're almost back to break even from the 2005, 2006 boom.
Okay.
You might have more data on that than
Sure.
I do
We're
on
close.
my end, but yeah, I think the biggest thing, sometimes when you're going to move into a house, we've done some videos on FHA and conventional and the differences, but sometimes you're in an FHA loan and that might not be the long-term loan that you want to be in. So you put down 3.5%, you roll in your funding fee with FHA, and 2 or 3 years down the line, you want your credit improved or whatever change happened. And the big key with refinancing is how much equity is in the home. And it's also, in a way, more difficult from an appraisal perspective as well, because unlike a sales purchase where you have a contract, you have a willing buyer, that holds some weight, in my opinion, in the appraiser's head, and he kind of is looking to justify that value to the bank, and can that value work? Whereas a refinance, you're literally kind of going in blind, and he's just looking at the most recent sold homes in your neighborhood and the closest. So refinancing appraisals are a little bit more tricky, and it is a cost that you have to bear most of the time up front to collect the money for the appraisal to figure out, can we refinance?
So is there a generic equity requirement?
It's the same as conventional. So most likely you wouldn't want to refinance if you had less than 5% equity for conventional. VA and FHA, you would need to have the 3.5, and VA you would need to have let me rephrase that.
So it's not. So I thought it used to be I have to have 20% equity in my house to be able to refinance. Is that not true?
No, it's not. No,
Okay.
You don't have to have 20% equity.
So it's whatever loan. It's whatever the requirements are of the loan that you're refinancing into.
Yeah. Well, to jump back, FHA and VA have streamlined refinances. Sometimes your bank won't even actually need to order an appraisal altogether. So let's take FHA and VA out of the refinance equation for now.
So I want to get a better. The rates are better today. I want to get a better rate on my home, and I've got 5% equity in it, maybe.
Right.
So what does it take for me to get today's rate and it sounds like it's simple. Like you call your lender and say, hey, I want to refinance. You get an appraisal. They tell you if you actually have that 5%. You do, so therefore you can then go through with the refinance, right?
Exactly. It's the same underwriting whether you're doing a purchase loan or refinance loan. Same requirements. There's nothing specifically different. Just really the appraised number is kind of unknown at the beginning with the refinance.
So that's the big tipping point.
Right.
If I get the number I want, I can move forward.
And you would want to run, before you spend the money, you'd want to run, a couple scenarios. If it comes back with 5% equity, comes back with 10% equity, comes back with 20% equity.
Well, sure. So you call your favorite lender and say, hey, I'm thinking about refinancing.
Here's my payment. Here's
your favorite realtor. Did I say lender? Realtor.
Yeah.
You call me. So then, all right. So I got what I want. What's it cost me to refinance my house?
It does depend on the city you're in for closing costs. Generally, you're paying the bank portion. The bank portion of refinance and purchase closing costs are typically the same. And then title company, you're actually saving a little bit of money because you're getting title insurance, but you're only getting lender's title insurance instead of when you buy, you're typically going to get owner's as well.
And there's no transfer taxes or anything like that you've got to worry about.
It does depend on the county, and it depends if you're taking cash out. So at the most basic level, the title insurance factor will vary based on the loan amount that you're borrowing, so there's some fluctuation. But at the most basic level, you're looking around $3,000 to $3,500 in closing costs on an average refinance, I would say, and we're in Howard County, so we'll just stick with Howard County. And if you're not taking cash out, different counties have different. Virginia has a transfer tax that you do pay every time.
Okay.
So it does depend on the area that you're in.
And if I've got a little more equity in my house than I thought I did, can I roll those costs into the
Exactly.
refinance?
Yeah, as long as you meet those 5 or 10% requirements, you could roll them in. Similarly, you could get, some banks can credit back some of the closing costs in exchange for a slightly higher rate. It's kind of reverse points. If you're familiar with paying points buy down the rate, you pay extra money up front to get a lower rate. The opposite, if you go an 1/8% or 1/4% higher, you might be able to cover all of those refinance closing costs. And that was really popular. Or in 2018, rates had been historically very low, 2011, 12, 13, 14. So a lot of what are called sort of no-cost closing refinances became popular because...
And there was a cost, it was just rolled into the interest rate.
Exactly, you're just paying for it. But a lot of people, your break-even time on paying $3,000 versus paying 20 extra bucks a month might be 6 years, and people are saying, hey, we're going to move out in a couple of years. So there are ways to bring down the costs.
Cool. All right, hope that helps if you're looking to refinance.